Hi, I'm Matt Culkin, co-chair of Steptoe's Financial Services Group, and welcome to another episode of Steptoe's Financial Services University, where we have a series of short, focused conversations with my colleagues from across the firm's various practice groups and offices around the world. Today, we're going to talk about EU insurance and reinsurance regulation, and I'm pleased to be joined by my colleagues Philip Woolfson and Guy Soussan in Brussels. Gentlemen, thanks for being here.
Good morning.
Good morning.
So just briefly, between the two of you and the team in Brussels, I know that you bring over 60 years of experience in this space. I'm wondering if you can just speak briefly to your specific areas of expertise.
Thank you, Matt. Thank you for the opportunity. Yes, I'm responsible for the very first 30 years, I would say. As you mentioned, EU regulatory and supervisory insurance is a huge arena of laws and regulations. And obviously, we have divided the burden, if I may say, over the years. And I have focused the practice on market access of EU and non-EU insurers and reinsurers. I have focused on the regulation and supervision of insurance companies and reinsurance companies, and I have looked at it from inside and outside. In other words, I've been advising the market, the EU players, for operating within the EU, as well as non-EU insurers and supervisors wanting to have some kind of access in the EU, and I will explain that during our discussion. Thank you.
And Philip?
Yes, indeed. Thanks very much, Matt, for the kind invitation to join you, along with my buddy and partner, Guy. I'm the other 30 years of experience that you've just mentioned. And I think, yes, indeed, mine's complementary to what Guy does. I've tended to be more focused on product issues, distribution, conduct of business questions, which arise inside the EU single market, for example, for US or other foreign groups which have divisions in the EU and are using the EU single market freedoms to expand across the EU.
So thank you for that. Before we jump in, maybe if I could ask each of you just to briefly explain, particularly for the American audience, how does the European insurance supervision framework operate? My basic understanding is that it's quite different than what we are used to here in the States. Maybe Guy, I'll start with you.
Yes, absolutely, Matt. This is something that I remind very often our American clients. We have still, until we know better, state regulation in the US, when in fact we have an EU integrated market, a single market for insurance that took many years to emerge, but that is frankly today a reality. I like to remember, or we ought to remember, the possibility for, including for US insurers, US carriers, to plant their flag in an EU member state, and from there to be able to operate on the basis of a single license throughout the EU, either by creating further establishment, basically branches or even subsidiaries, or by working on a cross-border basis. That is something, you will agree with me, is not yet available in a US environment.
And so Guy, let's take the US state-based model now and let's compare it to the EU framework. How does that supervision landscape operate?
Yes, Matt. We have obviously today we can say that we have an EU-wide insurance supervisory framework, and that framework, I can tell you, is dictated out of the EU institutions, is being designed by the EU institutions, and is imposed and applied in the same manner in all the member states. So what we have an insurance supervisory framework that concerns insurers, reinsurers, and intermediaries alike. And that architecture is overly accepted by the industry. This architecture, this framework is mature and fully operational. Today, it is embedded in what we call in the EU jargon Solvency II. This framework was adopted in 2009, got implemented in 2016, and it is the framework we know today, and that is what the insurers and reinsurers are bound to apply. Just like the supervisors are bound also to make it enforceable. I'm not telling you here that Solvency II, which by the way is approximately 3,000 pages of directives and regulations, was an easy thing for the industry to swallow. But overall, it has been accepted. It has been costly, but it has been accepted. Beside the framework, you have to consider that because it is so daunting in terms of what it entails and enforcement, you have had institutional players, not only for the design of the framework, but also for its enforcement. And what is interesting also by practicing in Brussels, we have seen as an office, the laws being designed, being negotiated, being adopted, and being enforced. It means we have been working with the European Commission. We are working with the European Parliament when it comes to adoption. We are working with the member states. We are working also with the European Supervisory Agency, so-called IOPA, and we are interacting with the national supervisors. So there is a lot of personalities and levels to handle, and frankly, that has been also the pleasure of practicing EU law out of Brussels.
So that sounds a lot like my experience practicing in Washington post-financial crisis. Philip, anything to add from your perspective?
Well, yes, I think Guy summarized it very well. Perhaps just some parallel thoughts and reactions points to share with you, maybe three, based on as Guy's pointed out, it's a harmonized framework across the EU, which was put in place. I think a lot of it was put in place post-financial crisis. So from 2008 onwards, we saw a tsunami at the time. You might recall people were saying it's a tsunami of regulation, we can't handle it all. But they did digest it, and that's created, I think also driven, it's a bit of a pendulum, these things. You can have a liberal environment, maybe in the early 2000s. We then had the crisis, and we have the pendulum swings, and we find a raft of legislation, especially around the consumer protection area, retail products, insurance-based investment products, which is a particular sector we have here in Europe, where there can be a lot of negative reaction from the financial crisis that pushes the legislator to intervene alongside with the regulator. So I think that's already in place. Guy's described it a little bit. One of the other points that comes out of that is that COVID, which is bound to rear its ugly head, has not resulted in broad legislative intervention at the EU level. But as Guy's already mentioned, IOPA, the European level, the EU level supervisor, they have given plenty of guidance, and we can come on to that later if we have a word about COVID. And then I think I'd agree with Guy that the sector, everybody's accepted the Solvency II framework. It's there, it's operational, it's actually now under review, but nobody's saying let's scrap it. Quite the contrary. I actually think that the EU is proud of what it's done on the solvency and prudential supervision side, and equally so, my neck of the woods around distribution and conduct of business, that there's a work in place there that enables people to compete and to operate across the market on more or less level playing field. There's always a few bumps, but that's normal.
Well, so thank you both for that. Let's take sort of that really helpful background, and let's now talk about the situation today. So I'm curious, and maybe Guy, I'll start with you. What does the current environment mean to each of you? Guy, I'll let you go first. In terms of your day-to-day work, what are you working on with clients? What are they worried about? What are the hot topics?
Yeah, thanks, Matt. Again, because Philippe and I are complementary in our practice, we would make sure that we're not going to report the same thing. And I will give a couple of examples that have frankly kept me fairly busy for the last couple of years. I think it goes to two concepts that are important when you think about an open market. The two concepts are, first of all, market access, and the second one is supervisory recognition. An insurer, an operator wants to have an access to the market as much as possible, free from any licensing requirements, complications, and recognition. Somewhat the idea that if I'm recognized and I exist somewhere, maybe I don't need to have the same level of supervision in the other country where I intend to operate or sell my products. So on those two concepts, we have been fortunate to be able to assist EU and non-EU insurance and reinsurance players. And we have done it in both ways. First, we have been helping market access, facilitating market access of EU insurers on foreign markets. And of course, you would think immediately about the US and China. Regarding the US in particular, we have been helping, advising around the EU-US covered agreement. It's a two-way street, that agreement. It helps also the US insurers in Europe, but it also had some virtues for European insurers. We have been involved in negotiations and we have been advising the market on this. We have also been involved more naturally as well on market access that international financial centers could benefit for their activities in the EU. Here I'm thinking about two key insurance, but certainly reinsurance markets that are known worldwide. I'm thinking here about Switzerland and Bermuda. Those two jurisdictions have jumped on a so-called equivalent status that was offered by the EU as part of the Solvency II framework. We have been involved in the advocacy for fair equivalence provisions in the Solvency II itself, and we have been assisting those jurisdictions in applying for equivalence and for successfully getting equivalence. This is work that continues because one should know that equivalence is something offered by the EU and which could be withdrawn. Equivalence suggests that the third country adopts not mirror image legislation, but adopts legislation that is similar, which makes actually that we can provide market access because we know you and because we know you are supervised in a similar fashion as we do in Europe. There is some irony, I must admit, to be assisting some third countries like Switzerland and Bermuda, and to realize that the UK today is thinking nothing more, but nothing less than an equivalent status once they will be outside the EU and will become a third country. Same rationale goes to it, same complication, same obligation to follow the rules, and we are also assisting the UK operators understand and hopefully help them to get the benefit, or rather, because it's a complicated thing, help them to restructure and to create EU operations post-Brexit.
Philip, you want to add a little bit from your side of the house?
Well, yes, indeed. I think Guy's presented, for example, the challenges facing the reinsurers. And I think perhaps some of the recent things I've been doing over the last few years, you might call that really the cold face down there in front of the customers and the policyholders and the distribution side of it. First of all, I think there's what I'd call a hangover from the financial crisis. We've had still claims and difficulties arising out of alleged mis-selling of certain retail financial products, insurance products during the crisis, and they just drag on, and it has to be sorted out. And that's a good fight we fight for some of our clients, and often it's around scope of authorization and whether the cross-border business has been conducted correctly, etc. Second angle is, of course, bearing in mind that the single market's really all about liberalization. It's really about the ability of a provider, an insurer, to get what I like to call a little bit of a US phrase, a ticket to underwrite across Europe by being set up and authorized in one state, the home state, and going forth and targeting markets in other countries, either directly or else by, as Guy's already mentioned, by having branches in that country. And we've had regularly over the years clients coming to us and asking us to help them with this ticket to underwrite and to work out, for example, which bits are subject to home state supervision, so the prudential side, and which bits are subject to the target market regulators' regulations, so conduct of business, for example. That's arisen around UK groups who have been reorganising themselves, and more recent activity has been around the insurance brokers, say in the London market, realising, oh my goodness, there's no equivalence. There's nothing happens after Brexit. The withdrawal agreement ends. What do we do? And they realise that they need to be inside the EU 27 in order to broker business. So we've been helping a number of entities on that one. And then the third angle, just to finish, is what I call conundrums, where clients are coming to us with questions that are peculiar to the sector. It might be something to do with governance. It might be around distribution. It might be around recognition of reinsurance arrangements, that type of thing. How does Solvency II work in practice? Or it might be cross-sectoral. And a good example is, everybody knows about it, general data protection regulation, what you call in the States privacy, and how do privacy issues affect the insurance sector, where you've got legislation that is not specifically designed for insurance. And there, and I should say it, remind you that we have a new partner who's joined us, Charles Albert Helleput, who is a cyber and data protection and privacy specialist with some insurance experience. Guy and I were delighted to find this out, and we are integrating Charles into our team willy-nilly, and we're confident that's going to be a real addition to our capabilities here. So there you go.
Well, I'm glad you mentioned him, because for our audience, there's another episode featuring him speaking about data privacy and cybersecurity in the EU. So I encourage all of you to go and view that one as well. Let's shift gears just a little bit and let's talk about COVID. Guy, if I can turn back to you, can you describe a little bit the sector's response in Europe?
Yes, I would say that because COVID came and obviously unexpected, and frankly the EU institutions, the machinery as I call it, was a little bit down. You would not have expected, when one knows the process to adopt legislation, to have Parliament sign in and have member states expert groups meeting. It was impossible. So the response has not been in terms of new legislative action. It has been more in terms of calls for coordination, for convergence, for reminding principles, guiding statements that have been made by different sectors, notably by EIOPA and by the European Commission. Those statements, so there has been quite of a response, I must admit. There have been, and Philip will also talk about them on the consumer protection side. But if you look at the response on the regulatory side, it has been, first of all, to make sure that the companies would continue to operate, that they would be properly capitalized. We have had reminders about that. But at the same time, as you know, enforcement and regulation means a lot of reporting, a lot of disclosure, all things that could detract attention to the priority of the time. So we have had some kind of relaxation on reporting and disclosures that have been decided without, again, legislative action. But we have had also reminding of the importance of maintaining the solvency and capital position of the players. That has been reminded many times, and also to take measures that would not affect that position. I take the example of dividends, where initially we went from an invitation not to distribute dividends to another stronger requirement, guidance, I would say, sent to the member states not to impose on groups not to distribute dividends. We saw, by the way, I should say, while we are talking about an EU framework, we saw that each member state took some liberty at implementing this guidance. Some countries, definitely some supervisors, made it an injunction, you don't distribute dividends. Some others did not. And that's also always a little bit the difficulty we have in a Europe of 27 member states, where even at a time of crisis, where you would think there is more convergence, that's not easy to get, because it's the time for each supervisor to retrench and somewhat to take care of their own companies and not to be concerned with the broader picture.
Philip, from the product side?
Sure, let me pitch in with a couple of points. I mean, first of all, I think that the sector, stateside as much as over here in Europe, is of course aware of the litigation around business interruption, and in particular the UK has taken a lead on this, with the Financial Conduct Authority running the test case in front of the UK courts, which we've been following. With a lot of interest, really for us from the EU perspective, to see where it leads. In the knowledge also that the UK is not alone. There's been cases in France, there's been cases in Germany, where it's very much a question of interpretation of contracts of insurance governed by national law. So in one sense, the EU supervisory framework's not in play there. On the other hand, that's the second point, EIOPA, as the European Supervisory Authority, has drummed into the sector, insisted with the sector, that insurers and brokers, intermediaries, to think about what's called product oversight and governance, often shortened to POG. Very ugly, but that comes out of the harmonized rules on distribution, requiring insurers and intermediaries to think about the product they're selling, to think about whether or not they need to change the product in order to reflect the changed circumstances that COVID imposes. So, for example, COVID, you can't drive your car because everybody's stuck at home. So do I get a premium holiday then? Do I get a rebate on a renewal? But if I get a rebate on a renewal, what happens about those who don't renew? So there's a lot of discussion around things like policyholder expectations. And also, if an insurer says, okay, I'll give you a premium holiday, does his reinsurer know that? So there are questions like that pop up, very specific, but very COVID-driven.
Those are interesting fact patterns to work through. I'm curious, as you look out to the future and beyond, what's on your radar? And I'll make it a two-part question. When you look to the future, what do you see coming? But also for our audience, if there's one thing they should take away from this conversation, what would that be?
I think that for me and Philip, and Philip already mentioned that, we would be viewed and characterized as insurance regulatory lawyers, which we are clearly. And that has been actually the interest of being an advisor in that market. We have seldom seen an industry where you have so many policies that could influence an insurer. And insurance is not only an issue of regulating the business. There are so many areas around it that Philip mentioned. And in those big files and difficulties of the future, climate change, among others, the digital economy and the like, insurance has a role to play. And the rules that will come out of the climate change, when they will be implemented per industry, the implementation that we anticipate for insurance will be different, and the role that will be given to will be different than the role expected to the banking sector or any other sector. And what we see now on those big files, the big difficulties and projects we have for the future, insurance stands on its own. I take an example: climate change. We know that there will be aspects of the package from the EU with the EU Green Deal, where there will be requirements coming out of it that will have a particular impact for the insurance industry. Whether you are insuring, whether you are reinsuring, the role into the coverage of natural catastrophes is also another big issue. So I can see the industry being in the middle of generational debates and decisions to be taken. And that has, to me, been one of the pleasure of acting for this industry, because it has not been just reporting, disclosures, rules of the industry, but many areas around, many areas where actually the EU has definitely a voice, and that of course comforts me as a word of conclusion that practicing this insurance in Brussels has probably another dimension that doing the same work at a national level.
Yeah. I would close along the lines of, I mean, Guy's absolutely right around climate. I mean, of course, the other one is cyber, artificial intelligence, the whole digital debate, where the insurers find themselves again in a unique position, to my mind, between, on the one hand, there are insurers out there offering cyber coverage, and at the same time the sector itself is vulnerable to hacks and to attacks, and whether or not, there's a debate going on right now over here, whether the insurers should form part of what we call network and information security, one of the areas that Charles Hillebut looks at, and where we've had discussions, because we know the banks are there, but the insurers have been a little bit out of the mix so far. I think, therefore, there's a number of EU-level initiatives which spread across, quite horizontal in their effect, cross-sectoral, but where the insurance industry finds itself absolutely implicated and wishing to participate, and vital to the future of the continent, of the planet, as I say. My closing remark, I think, would be, we shouldn't forget that the EU single market is a single market. It's about liberalisation of the sector to enable insurers and intermediaries to trade right across the market. And the framework and the developments we've been talking about, I think, have promoted that, continue to promote it. So don't forget, it's a ticket to underwrite.
That's a great thought to leave the audience with. Guy, Philip, thank you both for joining me today.
Okay, a pleasure.
And that does it for another episode of Steptoe's Financial Services University, where we dove into European Union insurance and reinsurance regulation. As always, you can watch more of our episodes and learn more about our financial services practice at steptoe.com. Thanks for watching. We'll see you next time.